seen the rand coming back a little bit from the weakness we saw this morning. We've also seen commodity prices retracing some of their losses as well. But it does seem that sentiment is a little bit fragile at the moment.
I think that the huge driver overnight was that IMF statement around where Japan and the US growth forecasts have been understated, and obviously the market at the moment looking for growth in an environment where inflation is definitely an issue. So I think that that was the driver. We saw a sell-off. We have seen a huge rally on the euro. We've seen a huge rally on commodities, and we were expecting some form of profit take at some point. It's been very, very brief and short-lived, really overnight, and offering opportunities to get back in again, back at those 144.50 levels on the euro, and then seeing gold retrace some of the losses we saw overnight.
In fact, we have seen that euro bouncing back, as you said, to 144.50 after trading below 144 a little bit earlier. Would you expect the rand to maintain a stronger bias from here as well?
Absolutely. I think we're seeing a small bounce on the rand. The rand was relatively strong based on what we were seeing being driven by commodities and obviously what was happening in the Eurozone. With the move overnight, we've seen both a sell-off in our bond market and in the rand itself, back up to those 670 levels, but really offering opportunity to get back in at those levels, looking for stronger 655 on the bigger picture.
Well, it looks like some of that pullback in the commodity prices might also have been due to a Goldman Sachs report saying that it would expect commodity prices to reverse some of the recent gains, advising clients to take some profits at this stage. But if you look at the global growth picture, is it supportive of high commodity prices at this stage, Brigid?
Look, I think what we're seeing at the moment is a lot of inflation hedging coming through in the gold price. I still like the gold to rally further, obviously expecting to see some form of profit taking at the levels that present themselves as an all-time highs. So, you know, for now, we're still seeing that upward trajectory remaining intact, as we are seeing as the appetite for carry continues. I mean, overnight there was a lot of talk about the US and Japan not offering value in terms of the carry trade. But I think overall interest rates still remaining very, very low levels, and until we go into that hiking cycle, that kind of phenomenon will remain on track. So for, you know, rand strength to persist with bond strength to persist, we can expect that kind of outlook for the short term until we start to see some form of hawkish comment or some form of inflationary cost push that then results in interest rate hikes out of South Africa, and potentially also looking at what's going to happen with the QE happening, coming to a grinding halt now in this June period coming up in the US.
Well, that IMF report's also saying there was no need for the SARB to hike interest rates in South Africa at this stage because growth wasn't really that strong at this point. It's also only expecting growth of 3.5% for this year, and that seems a little bit conservative, Brigid.
Look, I think what we're seeing at the moment, and I think the market's quite confused about whether or not the exogenous factors that are impacting our inflation view are in fact going to be the driver to see interest rate hikes, or whether or not we're overstating the second round effects that potentially can come through the system. So those are the questions that you need to ask yourself. How effective are those going to be on the consumer? How much pressure will we see, and will we in fact need to start seeing interest rate hikes sooner rather than later? Judging by what we've seen coming out of the Eurozone and the pressure that we're starting to see coming through in England, in the UK, it deems that we are in an inflationary environment, and that those factors will definitely have some form of negative impact that will definitely result in interest rate hikes. I think that, you know, potentially we could likely see interest rate hikes towards the last quarter of this year, and I think if you look at the market pricing, we certainly are seeing that being priced into the market already.
Well, inflation really a big focus this week. We've got UK numbers out today, we've got German inflation coming up, we've got China too, US inflation at the end of the week. Do you think we get to see the very same pattern globally, where we do have this not cost push but commodity-driven inflation coming through?
Well, we've seen food prices and the commodity prices rally. We've seen pressure on the currency, specifically out of emerging markets, you know, which obviously equates to some form of cost push. But nonetheless, I think if you look at what happened today, we saw the UK coming in at 4%. They are still well outside of the band where they're comfortable. The Eurozone, Germany specifically, still remaining under a lot of pressure, and that's why we saw the interest rate hike come in last week. And I think that continued pressure is likely to remain in the system for some time to come.
Brigid, you talked about our carry trade just a short while ago, and of course we have seen a bit of a pickup in the carry trade into South Africa recently. That seems to have reversed over the past couple of days. Do you think that's just a temporary phenomenon?
Look, I think, overnight we saw a small sell-off in the bonds, purely being driven by the rand levels. I think that overall appetite from offshore investors is still very strong in our local unit, and specifically in the fixed income space. You're still getting a good return on the foreign, from foreigners getting involved in South Africa. You've seen the rally on the rand. You're seeing continued interest in our bond markets, and I think for now that is likely to remain in play.
So just to repeat, the rand from these levels, where would you expect it to go?
I think, looking up towards 675, if you can get an opportunity to sell above 670, definitely an opportunity, because I still think that rand's likely to remain strong for the medium term, possibly back down to the 660, 655 levels.